Welcome again, ML Elevate founders. We meet every Wednesdays and Fridays. So, like always, I'm equally excited today to have an interesting chat with Bill. Quickly giving some context before we dive into the fireside chat. In today's session, you can expect some tips and tricks, some advice from Bill on multiple aspects, and we'll try to cover a bunch of aspects ranging from differences between a corporate venture capital and a financial venture capital, product market fit for deep tech companies in early days, expanding your market outside your home country. More specifically, Bill will talk about Greater Asia and China region. Some of the things that Bill over his time learned about acquiring enterprise customers and so on and so forth. So it's going to touch upon multiple facets of problem statements that you all are facing. With that, let me also introduce Bill a little bit, and I'll obviously let him also talk more about it. But Bill leads and manages the Greater Asia and China portfolio of business development for Intel Capital. He focuses on forging new partnerships and deepening relationships with global 2000 companies. And his core focus area is matching technology and bridging gaps where large corporations need innovation with respect to portfolio companies of Intel Capital. For those who may not be aware, Intel Capital is a stage-agnostic corporate venture capital fund that invests across a broad range of companies ranging from hardware, software, services, digital media, mobility, consumer internet, and whatnot. With that, let me welcome Bill. Welcome Bill to the ML Elevate session, and thank you for taking time out.
Thank you, Ayush. Thank you for that wonderful introductions, and it's a pleasure to meet all of the founders and founding teams and executives here. And I'm looking forward to the next hour to have hopefully an interactive discussions. And definitely I'll share some of my perspectives in terms of working with startups and also working with the enterprise customers, particularly the large enterprise that are headquarter in this region.
So let me dive right into it. So before we start, before we get into the thick of the things, Bill, throughout your professional life, you've worn multiple hats. You've done product marketing, you've done product management, you've done sales, you've done biz dev, and you also invest as a part of Intel Capital. Tell us a little bit more about your journey and how you evolved from a product marketer to today an all-round sales, biz dev, investor, as well as product manager.
Yeah, so it started with when I came back to Taipei in 1999. So as in terms of my education background, I was born in Taiwan and raised. I was in Taiwan until 14, and then went to the States, and then later on to Japan, and then come back to Taipei for professional work. And I started with, but by the way, all my professional life has been in the IT industry, right? Whether it's in the silicon company, board manufacturers, system house, and now to Intel, and then, the various functional roles from, product manager, product marketing, sales, biz dev, like I used to say. So it has certainly been very interesting, and interesting from the perspective of how you look at and engage with your customers, right? When you are a silicon product manager, all you think about is your silicon design, right? But it's more than that, right? You have to think about how the board manufacturers leverage your technologies from the design, and then you have to integrate the board with a bunch of different other components, make it a system. So the level of thinking is definitely different in terms of the breadth and the depth. And by wearing multiple hats, if you will, in terms of different functional roles, sales, marketing, products, that kind of round off my experience and gives me different perspectives on looking at the product and how your product are being accepted, utilized, and deployed in the market. So in a sense, it's looking back, I thought that the different career and the different roles that I had, definitely made me a well-rounded person. From the sense that, hey, I need to think about the different perspectives, and that really, was a very good experience.
Absolutely, couldn't agree more with you. And especially when you work with Intel Capital portfolio companies, it perhaps helps you in switching shoes when you talk to founders and your builders and your operators. Thinking from a product marketing lens, product management, sales, and an investor lens, of course. At the end of the day, great. Thank you for that. Must say that a remarkable journey and filled with a lot of experience. Diving into the next question, we have the ML Elevate card. I think some of them have raised capital. Everybody wants to raise capital today. It gives you more runway. But why don't you touch upon what is the real difference between a financial venture capital and a corporate VC? Would love to understand that, Bill.
Oh, absolutely. I think that's a great question. And then sometimes, I think a lot of founders, don't think about that. So, Intel Capital, we are a corporate venture. What that means is we receive our funds or fundings from Intel's balance sheet. And which means that, we only have one limited partner, which is Intel. That means that this fund doesn't have a fund life or a fund size, right? Depending on how big your parent company is. And as long as we perform, I think the parent corporations would likely let you to conduct your investment business, right? So versus financial VCs, typically they have a fund life, right, 7 to 10 years, and with the amount of capital that they raise could be, could be 100 million, 500 million, or $1 billion. And within that 10-year span, they have to deploy those capitals. So that's in a sense, corporate ventures could be more of a patient investors versus the financial venture capital. And sorry, I would just add one more is in terms of investment thesis, it could be very different as well. The financial VCs could have many different investment thesis and into different investment domain. And with corporate ventures, because you belong to part of the parent company, so you do have to invest, along the lines of where your company operate, as well as how they look ahead or look into the future. So so from a corporate venture perspective, I would say the investment domains they focus on is probably more narrow versus the financial venture capital.
Interesting. So let me paraphrase that, Bill, for the benefit of the audiences. So one key takeaway that I'm taking is that typically all financial VCs have an 8-year or 10-year fund life cycle, and they have an obligation to their investors, the investors in the fund, to return the capital within that time frame. And for that, they'll perhaps expect that kind of return from the founders within anywhere between 6 to 8 years. However, in case of corporate venture capital, like Intel Capital, you don't have a closed-ended timeline, and you can be patient and perhaps wait out for the startup to grow as long as 10 years or maybe more. Um, that's number one. Number two, because what I'm taking away is that because you're in a parent business, in your case, it's a chip manufacturer, and you have allied business lines, you may look at those sectors to invest into. But at the same time, would it be true to say, and can you throw some light on that, that brings more strategic value to your investments from your parent organization?
Yes, that is actually one of the area we constantly have to think about is what is the strategic values that we are bringing to the parent company, right? And also, how we could align some of our investments to the strategic directions that we're heading.
Great, thank you for that. And I think that lays out a very clear difference between and pros and cons of CVCs versus financial venture capitals. I think we have to jump into a lot of topics. So I'll pivot into a different topic, and given now bringing your product marketer and product manager hat, why don't you share your thoughts on how to choose your first 5 customers, and how should you be rightly investing your time into finding a product market fit for the benefit of the early stage AI founders that are in the audience?
Yeah, I think that's a great question. I think the first couple of customers that you have really set the stage for your next product or you want to develop, or the next round of financing. A lot of startups that I've interact with, when they're relatively early. They all want to engage with the largest customers out there, right? The ones that have the most recognitions, is like the Fortune 100 of the world. That is great. However, I think a lot of times you do have to think about what's the engagement cycle with those enterprise customers that you want to engage with. It could take a year and a half just to have a conversation and have someone listen to your products and organize internally to do a POCs, and by the time that's done, it's a year past. So wow. I don't think for a startup you have that luxury, particularly from a time perspective. So sometimes I would advise my portfolio executive is to find that maybe not the Fortune 500, find that Fortune 1000, right? Somebody that's not I wouldn't say lesser well known, but somebody that is more open and has a infrastructure to engage with startups, and also is more willing to kind of test out new ideas and internally or together internally with their customers. And I think that is some of the mistakes that early stage ventures make, is that they want to chase that largest customers out there, but they forget that, hey, you are an early stage company, you're just launching a product. You need a customer, obviously a solid customer, to validate and potentially integrate your technologies into their solutions. So that is something that I think I would give. I did kind of the advice that I would give to this group is that think about who are those customers that can really give you the luxury of validating your product within a short time frame.
And as well as, if I may add to that, validating your product as well as give you a reference case study. So exactly. In the early days, you may want to build your reference case studies with medium size, or as you rightly said, Fortune 1000, 2000 companies, build that reference catalog, get their buy-in, and then perhaps move up the size ladder. And also one more thing, would it be true to say, Bill, that you talked about multiple aspects of Fortune 100 and Fortune 1000 companies? Would it be fair to say that some of these companies, by their size, are more nimble and more fast in decision making, and therefore the sales cycle could be less than 18 months, as you called out, in very large companies, the Fortune 1000 and 2000 companies, so that you could sort of iterate on your sales cycle faster? Is that fair to say?
Yeah, definitely. When someone has that infrastructure to adapt new technology faster versus others, obviously you probably get your payments faster, and you also get validation faster. And by getting that, like you were saying, right? Once you have been validated, you could publish a white paper, right? So, and then and use that white paper to market to other customers. And you're no longer just a proof of concept anymore. You're actually a product ready startup.
Great. I mean, and this leads me to my next natural question. So hypothetically, let's say the founders and the audiences have taken an advice. They've got their first 5 customers, 10 customers in a particular geography. Let's assume India, for example, right now. And I know a lot of the founders I keep talking to want to go, either eastward or westward in your markets. Let's talk about APAC for now. So, let's say the startup has built in India, got some first few customers, perhaps some references. When, and if at all, what should they focus to the APAC markets, the greater East, the Japan, Korea, the Southeast Asia market, and what are the things to keep in mind there, Bill?
So when we think of US or China, right, we think, okay, it's one country, right, and so it's probably easier to do business there. And we kind of use that same logic and say, oh, APAC, it's probably more homogeneous. In fact, it's not, right? APAC is actually consists of many different countries, different cultures, and sometimes even different languages. So that is something that you have to keep in mind. And because the ways of doing business could be different, and how the business operate could be different. Because, for example, in the case of Japan and Korea, they all the big companies or conglomerates, right? You have the Samsung, LG of the world, and then in Japan, Toyota or Docomo. They heavily rely on their system integrators and partners to integrate a solution and then build that into a product and to be leveraged and used by these end users. So so I think understand how business are conducted is critical, and you need to treat, I think, different country / market differently. I think that is something that is very important to keep in mind.
Awesome. Thanks for that. So multiple things to keep in mind, just to paraphrase: culture, localization, ease of doing business. I'm not sure if time zone becomes so much of a hassle between APAC from, there's a 3-hour difference from India to Taipei, where you're based, right? But great insights. I mean, building onto that, on the same topic of moving into GTM, and we talked about your first few customers. You also touched upon like large customers, like examples like Docomo and Toyota. But any more tips on cracking or hacking or penetrating into enterprise grade customers in global markets that you can think of, Bill? Of course, one that you called out is perhaps moving with partners, but any other thing that comes to your mind?
Yeah, I would say, study the market and then, identify who are more receptive in terms of, for example, having an organization or infrastructure to receive or adopt new technologies. So for example, in the case of NTT Data, which is one of the largest system integrators, and they, their clients are the Fortune 500 of Japan, right? They actually have a startup program that I think are hosted and conducted in a lot of Southeast Asia countries. I don't know if they have a presence in India or not, but that's one of the ways for you to expose yourself, to the large players in these markets. So that's one thing to consider. The other would be, I would say that if you are seriously going to expand outside of the Indian market or where your domestic market is, you should think about investing ahead, right? Investing ahead, meaning that identifying a partner to collaborate with, and then see, you talked about this earlier, is, for example, localization of the language, right? Japan and Korea, if you're gonna, leverage, if your product is, for example, English-based, you need to think about having that translated to the local language first, before, you have that ready first before you start going out and promote your product.
Very, very valid point. So essentially, where do you, just building onto that, Bill, and a natural segue into this question is, so are you saying, just to be clear for the audiences, are you saying, let's say hypothetically, I see a market opportunity in the greater APAC region, and I believe that my product will fit the market. Are you suggesting that we invest ahead and either have a presence, a local presence there, rather than doing remotely and then trying to validate the PMF remotely? You are suggesting that you invest ahead, take that plunge, and sort of move with partners or a local presence. Would that be fair to say?
Yes, that would be my suggestion.
Awesome, thank you for that. I mean, that's an insight that works really, really well in the APAC market. Moving on now, we've touched upon, of course, coming back to the topic that we started with, which is the difference between CVCs and financial VCs. We touched upon PMF and market expansion and so on and so forth. Now, hypothetically, the startup has done all the things that we discussed and has become big. Now, let's talk about exits, because at the end of the day, you also as an investor expect an exit. While you are patient, you want an exit at the end of the day. So what are some of the key considerations that you think founders should keep in mind while thinking of an exit, acquisitions, IPOs? What is your opinion on this, Bill? And we had one of our founder friends, Clement, who talked about this in the last week's session, who sold his company. But would love to hear your opinion on this, Bill, on the exit scenarios and considerations for founders.
Yeah, definitely. I think every founders wants an exit. I hope, right? And a lot of the founders, I think, particularly first-time founder, right? They all kind of hone in on this idea of, well, I'm going to take my company, grow it big, and then to multi-continents, and then I'm going to go for IPO. But in fact, IPO might be the last resort, if you will, in terms of exit scenarios. A lot of our companies, Intel Capital portfolio companies, most of the exits are through merger and acquisitions. And I see that a lot of experienced founders, in particular, when they start their setup, they already have an M&A targets in mind, right? They know that by the time they finish this product and have somebody validated it, they would have inbound inquiries about, hey, I really like what you're doing, and then let's talk about M&A. So so most of our exits are through M&A instead of going the IPO route. So that is sometimes a misunderstanding on a lot of the founder's part that hey, the only route for exit is IPO. In fact, it's the opposite.
Interesting. And I would, especially for the audiences and the nature of the businesses that the founders are building in this room, it works well. B2C may be a different ball game, but here we are talking more ML, SaaS, deep tech companies, and I think this actually completely resonates with what one of our previous mentors talked about, who successfully sold his company. But great, thank you for that. And moving on to my next question. I've been a VC in my past life, and of course, like I already said this, that everybody, all founders, but I have not met a founder till date who doesn't want to raise capital. But can you give a little peek into life of a founder VC relationship post-investment? So pre-investment is very different. I mean, everybody's chasing you, and there are a lot of questions and due diligence and reference checks and whatnot. But hypothetically, we've crossed that bridge. And what is any perspective that you would like to share on this, Bill, on post-investment founder VC relationship?
Yes. So I think not just the founders and the investor relationship. I think if you engage with a serious relationship, that's how you should treat it, right? So obviously if you're a hot company, right? So a lot of investors will chase you. Obviously they'll bring out the best, right? They'll say hey, beyond equity, this is other values that I can provide, right, to you. So I think after the investments, that's when I would say the hard and real conversation starts, right? Once you take the money, then investors expect you to perform, to perform to the financials that you share with them, right? To perform to the timeline and the schedule that you're going to deliver to for your product, right? So I think that's really important to keep in mind. But from founder to investor, right? Investor will tell you, hey, this is what we're going to provide. And once you take the money, you should also expect the investor to perform and deliver on what they promise. And so that's very important, right? Because I would say the reputation is very important, both the founder's reputations as well as the investor's reputation. So particularly, on the investor side, we definitely want to maintain our reputations, and we want to deliver what we promise. Because we have a saying, right? The best deals are actually referrals by the founders, right? Or the startup executives. So you would definitely like to keep our end of the bargain and deliver on what we promise you to do. And the other thing is, investors are, for experienced investors and experienced, venture capital firm, you could actually leverage a lot of things from your investors. They have different skill sets and knowledge base, and you should, constantly check in with your investors and also ask them for help. Don't be afraid to ask them, for stuff, right? Can you, link me with another investor because I need to consult him with these type of ideas or expertise, right? So it is you can treat them. You should consider them, not just only on the professional aspects, but only think about them as your friend, right? As your advisors. And I would say that like in any relationship, is two ways, right? So you have to build that relationship. You have to build that relationship You have to build that trust. And then, as it becomes a positive spiral, I think, the relationship will go very well.
Oh, absolutely. I mean, some very good insights. And I really like the fact that obviously VCs are in the business of investing, so they have to also, a lot of VCs, a lot of marketing language. But this what you just shared seems to be a very true and transparent advice. I am so sorry to be putting you on a spot, but do you want to share any anecdote on a no-name basis, of course, without naming the company or the founder name? Any story that either wasn't going well, and then eventually, the relationship, it turned out to be great. I mean, the jury may be still out on some of these, but sorry to be putting you on spot, Bill. But anything that you would want to share, with no names, of course. A success story or a story that didn't turn out to be that great as expected. Anything?
Yeah, definitely. I mean, for example, right, one of our AI company based in US want to expand overseas, and particularly into the Japan market. And I during a conversations or event that I hosted, I learned about this company, and then I introduced him to a senior executives at a Japanese corporations. And this was I found out later that the executives at this particular Japanese corporations, I think really liked their product, and it was their field team, my portfolio company's field team in Japan later told me that, hey, thank you for the introductions. They tried to secure a reseller agreement with this particular Japanese corporations, and the only touch point that he could have was this senior VP's -4 level. And after the introductions, the senior VP went back to Tokyo and asked his team, hey, hurry up, let's accelerate this process. And the discussions of the reseller agreement was stuck for many months at -4 level, his -4 level, and quickly bubble up, and they were able to strike a agreement after 3 months after I made the intro, and there, as a result of that, I think 5 years after the reseller agreement was signed, my portfolio company is doing quite well in Japan, and this Japanese corporation has brought over 50 plus Japan 500 customers to adopt their technologies and platforms. So this is the type of success that I personally had with this particular portfolio, and there are many others that I can share later if you guys are interested.
Awesome. That's fantastic. Before we get to the questions, I think folks have started posting questions. Thanks, Puneet. But my last question to you, Bill, AI, future of AI, deep tech, APAC markets worldwide. What is it that is exciting you the most? What is it that you're looking forward to in the near and the midterm future in the next 5 to 7 years?
I think in the machine learning, AI space, or deep tech, right? I think most of what I'm most excited about is leveraging those technologies to solve big problems, and that's probably what we're looking for, is how can you solve a big problem that's not just in India, or it's transferable to elsewhere in the US or in Asia or in Europe, right? So if your technologies or the solutions that you develop can deliver that, or has the the potential to deliver that, I think that would be fantastic. So I'm looking forward to learn about some of the technologies that these group of executives and startups are doing. But I think that's what I'm most excited about, is what is that big problem that all of you are trying to solve, and how transferable that is to other parts of the world. And that's what I'm looking for.
Awesome. That's great. I think clearly, I mean, I second that, and I personally, my personal view, and of course, my company's view, that is Amazon, especially we are very bullish about the next 10 years in the AI space, be it generative AI of images, voice AI, and language AI, of course, computer vision, and so on and so forth. Perfect. So Puneet is asking, how does Intel Startup Program tie in with the Intel Capital's objectives? They're two separate companies, but and how can the ML Elevates founders gain from similar Intel programs? Specifically for India-based startups, what factors related to GTM domain expertise often turn out to be make or breaks based on Bill's experience from Intel's investment? So you can take it up in two parts, Bill. Question number one, essentially, how does the Intel Startup Program, and we have folks from Intel talk about this in the earlier session, does it tie in with Intel Capital? I know that there are two separate companies, but any views on that, and how can our founders gain from this?
Yeah, so the I have a little bit of understanding of the Intel Startup Program that's run and hosted in India. So I think that's one of the way where Intel India is trying to engage with the local startup ecosystems and trying to provide values, and also by having that startup programs. Maybe some of our product teams and sales and marketing people could partner with to expand Intel's business in the Indian market. So to your questions, is that related to Intel Capital directly? No. However, we do take a look of the startups from the Intel startup programs that are being hosted in India, and if some of the companies that we're interested, we do. I believe we do talk to some of the startups.
The second question was primarily around the kind of trends that you have typically observed with Indian startups. The kind of investments that you've made, anything in particular that you've noticed over the years with Indian entrepreneurs, especially on the deep tech side, they tend to go wrong, or some of the things that, maybe, Indian startups typically tend to ignore some critical aspects in the longer run.
Okay. All right. I'm going to take a step back and say, it may not be just for the Indian startups, right? It's probably more relevant for all the startups. I think sometimes the startups focus on focus on the technology development and try to highlight the technology that you guys are developing, but sometimes they forgot how their customers would how your customers will receive and deploy the technologies. So sometimes that handoff, if you will, or that engagement does not go smoothly because you are focusing on the technology aspect, but rather you need to think about how that technology will deploy and be leveraged and offer as a service or solutions to the customers that your customers are selling into. So sometimes, they forget that, the way to conduct business. So it's not just only focusing on the technology aspect, but also you need to consider the business aspect and how to engage, particularly with your customers. So maybe I can give you an example, right? So let's say this is a real life story. I think with most of the large corporations, once they become large, they need to have a systems and in place, right? So they need to work with the different vendors, right? And the different vendor, they will assign a vendor code to a different vendor, right? So I'm sure Amazon does the same. Like as for Intel, right? For Amazon, we say, oh, okay, this is AWS, and then so once that's established, then anything that AWS sell to Intel, is established because we have that formal qualifications or relationship already. But if you're trying to for startups, right? You can't sell direct. Sometimes you cannot sell directly to Intel or to AWS, right? You have to go through a partner, and this is something that a lot of startup forget is the way of conducting business, right? They keep coming to Intel. Intel loves your product. However, you need to work with a third party that has a vendor code with Intel. Otherwise, you can never get into Intel. So I see that with a lot of startups is when they're trying to engage with the large enterprise, they forget about this. And so do keep in mind that this is how kind of large enterprise operate. And if you want to particularly go after some of the large enterprise, you need to understand the different business dynamics and how to engage.
Thanks, Bill. That was quite useful.
Hello, hi Bill. Thanks for the information that you have just shared. I just want to understand, since we are trying to solve some business problems using artificial intelligence, I think that is in and out the use cases that we are trying to address. But there would be multiple segments to the problems that we are trying to solve. Then there is a possibility that at current stage, we are able to solve some problems and generate some potential revenue. But in larger, we want to solve a bigger problem. So should we go after those initial revenues, slow down the progress that we're trying to do to solve a bigger problem? Or should we just ignore those revenues that are coming through inbound or any other methods and keep on focusing and moving towards solving the bigger problems? Because, yeah.
So I think you definitely want to solve the bigger problem, right? The bigger problem probably means that there's bigger potentials in terms of revenues, opportunities, etc. But before you can solve the big problems, you have to prove that you're able to solve the subsets of that big problems. Right, so that's one of the way for you to validate to your customers and to the customers' customers that, hey, this particular company is capable of solving those sub problems or the smaller problems that are tied to the bigger problems, and that will build the confidence to your customers, to your investors, etc.
Understood. That's all.
Does that answer your question, Rahul? You have a follow-up? Please go ahead and ask a follow-up.
So Bill, what happens that let's say each of us have some funding in place, right? And if we go after smaller revenues and not solving the bigger problems, the costs are already happening because the team has been made and it's a cost that is going out and money is being burned. Then again, we have a certain runway present with us to solve the bigger problems that we want to solve. And if we going after a get sidetracked into solving the smaller problems, then it can create some issues on that front.
Okay, so maybe I kind of misled and maybe answering correctly. So I hope that smaller problem is part of that big problem, right? So it's
Yeah,
not
yeah,
that you need to digress to solve something else that could bring you revenues to for you to sustain your business, but it's part of I guess you have to stage it, right? So in order to solve that big problems, you obviously have to stage how you are going to get there.
right.
And I hope that the smaller problem is the first or second stage of you before you get to that final stage.
But the issue is that the customer segments are different. The ones who require a smaller problem is not the final customers that I want to target, let's say. So that is the issue. Like even if I solve it for the smaller clients, then they will say like it doesn't really impact like whether the bigger folks will like that smaller problem to be solved or not.
I see. Okay.
Yeah. Okay. Awesome. You got the answer. So we'll make the connect, and maybe you could take it offline.
I really wanted to know from you, how do you look into the synergy part of things, right? When it comes to the chips business or the core business of Intel, I think understanding what kind of startup ideas we have, direct synergies, it's easier to fathom. But with regards to startups in cloud, SaaS, even ML, how do you kind of basically assess the overall synergy when it comes to Intel Capital's investments?
Oh, I see.
Take on
So
that.
yeah, so even we are in the silicon making business, right? So silicon design business. However, I think silicon alone is not going to to beat our competition anymore, right? From Intel Capital perspective, we do invest beyond silicon, and actually cloud, quote unquote, is one of our investment domain that we have, which includes SaaS, cloud first type of software business, DevOps, AI, machine learning. That's all part of that cloud investment domains. And so going back to my earlier comment about investing and create that strategic value for Intel Corporation, that's why we are focusing on not just the silicon or the hardware aspect of our roadmap. We are also looking at how to complement or enhance our hardware through softwares, through optimizations, through DevOps tools, so to equip with our sales teams that assets to go after the customers.
So, like I kind of like got your thought process on like how should we like really get that vendor onboarding process on, for example, Intel, right? So like that, like getting that, like cracking that, like third party partner or the third parties who are already working with you, right? But like how easy is it, first of all? Like for example, if I want to work with Amazon, like who are our accelerators per se, right? So like integrating our solution with Amazon itself is like a huge time consuming process, right? How do we like shortcut that process? Any hacks or any tips around that?
To shortcut how to work with AWS?
No,
And you're asking an Intel person. No, sometimes I personally don't have any experience working with AWS directly to sell our product, right? But we do try to. I think AWS is doing a fantastic job of enabling ISVs and enabling partners to become part of their platforms. But joking aside, I think this is where I think our startups need to invest a little bit of time to understand, is there another partner that you can work with, which make your life easier to work with AWS?
AWS was an example. So yeah, I mean, like on the similar lines. For example, if we have to work with, for example, Salesforce, right? So I mean, there are like multiple ways of working with them, either be on their app marketplace, or like really find out a solution provider of Salesforce or something on those lines, right? So I mean, like for B2B companies, the major pain point is selling to large customers, because
Right.
to customers, it means that like we have really elevated the company to the next level. So which becomes like very easy for us to get like similar companies like that with like these references. So I mean, in your experience or any of your startups who have done like something phenomenal in like really cracking like these large partnerships, I mean, any stories around that, or anything, any path or the path of least resistance which they really took to make it really happen?
So I would answer your question this way. Obviously, the shortest distance between two points is a straight line, right? We all like that, right?
Yeah.
But sometimes it doesn't work that way. So sometimes you have to go to point, between A and B, you have to sometimes go to A.1, A.2, then B. So, for example, right? I'm sure a lot of you know that there is also a category called MSP that resell for AWS and other cloud services, and that might be a way to crack into selling into large enterprise, because these MSPs actually manage a lot of the enterprise customers internal systems and data center. So that's another way to, for example, get into Samsung example, because, Samsung actually outsourced some of their services and to be managed by these MSPs that are in Korea.
Got it.
Yeah.
Got it. Thanks, Bill. I think
Thanks.
we're over time. Thanks, Bill, for taking all the questions. With that, I will first of all thank you for taking time out and sharing your nuggets of wisdom with the ML Elevate cohort founders. And we'll sync up with you if anybody wants to connect one-on-one. We'll make those connects. But thanks again, Bill.
I really appreciate the opportunity, and it's very nice to meet all of you.